I'm just trying to make a real quick intro for new people getting started with us. What happens over and over and over again on the market? Let's just go back on an Ethereum chart some time farther back here. We can probably see this time and time again. What happens over and over and over again, you get these impulses where price starts to move one way or the other. Basically, it's buyers or sellers, whichever side is tapped out, and the price starts moving the other direction. So you have these impulse moves one direction or the other. And what happens is when price moves above a lot of times it's a psychological level, and sometimes it's a real, it's just a level on the chart. But like for example, $100 Ethereum is a pretty important level. So what we say here is when we see price interacting with the level, there's support and resistance. So let's say 100 was our support we were watching. What happens is price comes down into these support levels, buyers start to pick up and buy a lot more as you come into these support levels. Basically the equilibrium changes. Obviously as price comes down, there are more buyers interested, and as price goes up, in theory there are more sellers interested. All right, what happens over and over and over again in the market is as price action moves around, support becomes resistance, and resistance becomes support as those levels are broken. Now I'm going to show you this. Let's go back to Coinbase. Let's show it before the Coinbase feed prior to the prior market. Okay, so this is the prior all-time high on Ethereum on Coinbase feed. So you see what happens over and over and over again is when price breaks a certain level. So in this chart, it was 20-something dollars. So say $30. Price will break that level. That price becomes support. Now it might have been resistance in the past. You see right here, it came up and it got sold off right at right around $20. It's a psychological level probably, right? That's really probably the level. And then you see it tested $20. Let's zoom up even more. So it came up at 20, got rejected at 20. It's a long, long time ago, way back in 2016. But roughly $20, $21 was the resistance level. So the market fought with that. And then we came up here and we fought with it again. And then what happens is when it breaks through a level, that becomes support. So buyers will come in when you break through a level and make a new higher range. Sometimes price comes back, usually price comes back to test it. In this case, it just took off. Maybe a bad example because Ethereum does kind of crazy things. But we see as Ethereum, you see here it fought with $100, right? So it had a resistance at $100, which is obviously a very strong time for Ethereum. Right around $100, it started to sell off. That was resistance all through here. And then as Ethereum broke $100, that becomes support. So I'm going to mark that as green. So I'm going to mark support as green and resistance as red. So now at this time frame, you see it came back close to it. It wicked. This isn't a crazy wick. It came back down close to it. Really our support level was right around 140 after it took off. But this happens over and over and over again in the markets. That's the most important thing to know when you look at trading, if you're going to start trying to trade cryptocurrencies. And on the way back down, look what happens here. I'm going to draw a couple of lines here for you. So obviously we moved way up in price, and you see here this resistance became support, this level right here, and then we have another level right here. You see all the times that the price interacted with those levels, all right? So over here on this side of the chart, what we can go look is as price came down, those levels that used to be resistance before acted as support. So what you'll see happen is on the way down, a lot of times you'll see price bounce at those levels. So the market fought with, and finally broke through the 750 level all the way up here. And then as the price came back down, it sold off. You see it wicked all the way down. At some point came really close, got a bounce. Then this prior support became resistance. It's 1200, and then it bounced back off of that, and then back up. Really, it found support at 750. So this happens over and over and over again. Support and resistance, support and resistance. So you can see it play out in the chart. You see these levels. I can just sit here and just pick levels all day long. You can find levels where the price interacts with it over and over and over again until it breaks one way or the other. Okay? So that happens, and that's what we're playing. Greetings from Australia. Thanks, Matt. So that's what we're playing with when we're trying to trade assets, really. So one of the main things that we can look for is when price breaks above a new level. So these all-time highs are fantastic places to trade because what we enter is called price discovery. When price has never been in the area it's at, when we make a new all-time high, nobody then knows how high the market could go. The market has to figure out there's no existing levels to work with. Let me move this right up here. So that's what's happening with Ethereum. So we made on some feeds a new all-time high. We need to break low 1500s to be in true price discovery, since we've had a spike to 1500. Take a sip of my rum. That's the main basics to keep in mind. So these candles, what these are, and I can put some links to some really good resources in here. How these candles work, but it just tells you a lot about what happened during that time interval. So I just went down, sorry, I meant to go to the 4 hour. So I'm on the 4 hour right now, which is what we've been trading on recently. So every 4 hours a new candle is made. So a new candle starts over every 4 hours. So what we can see happened just right now is we see back on the 19th, a couple days ago, we came into this resistance, this prior all-time high right around 1440. That became resistance for us, and then we sold off. And you see that this other level I've got marked in here, 1365, is also will act as support and resistance at times. We could probably pull it down right there. And what I just did is I pulled it down. I saw the bodies, the close price. The price pushed up very strong on the 10th of January. Pushed up very strong to 1347. It opened on the 10th at 1347 and sold off immediately down to 1260, and that started a downtrend. Okay. But since then, price has bounced all the way down to 904, and it started recovering from there. So this 904 level, which at one point obviously acted as resistance to price in the past, has now become support. So now we're finding support at that price level. All right, so we found support there. We came into this acted as resistance. False break above, came back down. And there's probably more fine-grained price levels we can look at, but you get the idea. And the price pushed as high as 1438, and then we had another sell-off. Price bounced around, and then you see here price got as low as 1038, didn't quite get down to 1,000, and then price pushed back up. The buyer started getting control again, and what we did is this is called consolidation. When you just kind of ping pong around in a specific price area, we consolidated right here until we started making another push back up, but we consolidated right above this support, and in theory there's probably another resistance here we consolidated below, right? So I could sit here and draw in just a very large number of lines, but we don't want to get that detailed right now. But yeah, so what happened is price consolidated in this little bit of range here, and then it broke above that and off we went, and we came back down, up into this resistance, down, and then broke out. So now that we're on a really low time frame, now that we're above this prior all-time high, it should act as a little bit of support, which it is right now. You see we broke above it, we came back into it on the 1 hour. This is a very low time frame for me anyway. 12 minute will give you another view. Broke above it, found some support, bounced, and then fell below it, and we're just ping-ponging around it right now. The market's trying to decide what to do with that. We had a strong impulse up. So we'll see if this is a rejection, if we get rejected here. Normally, initially you do. Normally, very early when you first break a resistance, normally you actually get pushed below it, and then you push back above it, and then find it as support. Let me show you some examples of that on a low time frame. I'll probably just find it over and over and over again. Let's go back over here. All right. So you see, here's a level I'm looking at right here. So you see the market likes to come back and work with the same level over and over and over again. So that's just good to keep in mind as you're watching the price ping pong around. Price rarely does it do what you see right here. Rarely does price actually break out. Now in crypto it's a lot more common than other things. But rarely does price just start going up and never come back to that level before resuming. It's very much a jig. This is what price does on all charts, okay? But over time, you see here the progression is you're moving up. So that's what we're going to talk about next is trend lines. But it's gonna ping pong around significantly. It's just know that. So when you first buy crypto, the odds are unless you bought at one of these strong extensions and happen to buy right here, price is going to come back down and be either below your price or right at your price for a period of time. Now look, even here where it looks like it took off, I do believe it came back there, right? Yeah. So if you bought here the strong expansion and you were just holding, like you bought with the intention of holding, you would have been green you would have been up on your purchase for a couple of days from, this is like December 16th all the way over to December 21st. So several days you've been feeling good, then all of a sudden you see the sell-off and you'd be in the red. But this is why in crypto we hodl, because if you kept holding, there you go, right? It just zigzags around. So you might have bought there and thought you were doing really good, and then actually came far below, and then it recovered, and it just keeps ping-ponging around. So if you hold for a little bit, that's another small thing to keep in mind, is that don't get too discouraged if you buy something and it goes red right away or shortly thereafter. As long as it's not, you're not going the wrong way. The other thing is buying with the trend, all right? So now let's talk about trend lines and trends. I've got a whole bunch of lines on here now. I don't normally have this many lines on my charts. Well, maybe I do. I kind of get busy charts after a while. All right. So the other thing, too, is the trend that something's going. All right. So Ethereum's obviously in an uptrend. So how do I know that, right? So looking at the long-term chart, we pushed up and it came down. So this whole time, Ethereum was in a downtrend all through here. And really that trend, you could identify that trend. You couldn't probably identify that trend in the moment. So if you were trading this, way back here I remember this. Like, we didn't know if this was a dip and it was going to continue up to 2,000, or if this was going to seesaw its way back down. How you can identify the trend is a couple of main ways. There's trend indicators, there's momentum indicators. You're welcome, Matthew. So there's all kinds of indicators that'll help us figure out where we're at as far as what trends are happening. But the main thing to keep in mind is just how price is reacting to certain things. Are you getting a strong bounce off of support, or are you getting weak bounces off support and pretty strong sell-offs? The other thing to keep in mind is, again, price will ping-pong around, but it takes some time to identify a downtrend. But one of the ways you can identify a downtrend is when price pushes up to a level, then sells off. You're going to get these bounces. Now, when it starts bouncing and selling into resistance, you start making what's called lower lows. So what you start to see happen is the price starts to get lower and lower and lower. And if this happens a few times, that tells you that you're starting to be in a downtrend. This is pretty obvious by this point, right? If you were at 1,400 and you sell off to 400, you're probably starting a downtrend. And sure enough, you see, then we bounced back a little bit to 800, and then we kept going down. Now, the downtrend was clearly identifiable somewhere probably right through here, right? As strong as these things are selling off. To the untrained eye, and when you start looking at the price levels, you could probably identify that you were, anyway. But what you can see here is that we are clearly in what we call a downtrend. I'm gonna call what's called a trend line. So I draw a trend line going on the chart here that sticks. Weird. Chart's being weird on me. So we had a downtrend. Now we can typically find, interestingly enough, trend lines that line up to things. So I had a little bit of a downtrend line right here. And so we can start to track down trends as well, just like we can up trends, okay? So now we go back over here. So that tells us obviously we're in a downtrend. We see price is constantly pushing up, and it's making making lower highs and lower lows. That's a downtrend. Okay? All right. Now we go over here. This is a range-bound market. We just went sideways for quite a while. So it's pretty much sideways, right through here. The market didn't really go anywhere. It was going sideways. This ended up being a bottoming pattern. Now, you don't know this until after the fact, but you're going sideways right here. Now, this is tradable. This, you could have clearly identified a shorter-term uptrend right through here if you were trading this. I'm on a daily. So you start to see price makes higher lows and higher highs. You're in an uptrend. And so what happens when you're in an uptrend, what traders want to do is you want to buy off of support. Now, it's kind of scary, but when you get the hang of it and you just get used to the market bouncing around, it's not so scary anymore. But what happens in the moment when you identify that you're in an uptrend? All right, I've identified. All right, I've seen this. We're bounced. We had a higher low. So this was my former low, and then we put in a higher low. This was my former high. Then I put in a slightly higher high than that high, and then a higher low. And then a higher, all right, we're in an uptrend. I got this. I can see this now. So from December of 2018, I saw it kind of bottom out. And then I see it start to recover through 2019. All right, so that would have been a tradable. Now we're in a tradable area. We can start to trade this thing. But I couldn't start. There's no way I was going to know this was the bottom. There's no way. People will tell you all the time, oh, this is the bottom. They try to call top. There's no way anybody knows that's going to be the bottom. You can start to get a sense. I mean, once you've been around the markets long enough, you can start to, okay, you can maybe, I get these gut feelings that we're coming into a kind of a bottom or a top, but it's just a pure gut feeling, and a lot of times I'm wrong. So there's no way to know. But you get the idea. So I've got this uptrend here I've identified, and I'm going to put these trend lines to help guide me. So why is that going crooked on me? That's straight. All right, so what I can start to see happens is the market actually starts to, and traders start to react to these trend lines that develop. And you can see here how many times the price reacted. I'm just quickly doing this. I would do this with a lot higher fidelity if I was actually trading this. I'm just giving an example. But this can give us some guide. So this tells us a little bit about maybe when to buy and when to sell. What we want to do is we want to buy on support in an uptrend. So what that means is, let's say I was looking to actively trade this. All right. And there's something that we do in Conquer Trading and Investing that if you need to go to Jordan's page, and there's a link to, I don't know if the course link is in here. The course is great if you want to learn a lot more details. I'm just giving the absolute basics. But what we want to do is we want to identify all these support levels. Now at the time, let me flip some of these around. So say I was actually trading on April 2019. And I've identified that we're on an uptrend, and now I'm starting to try to trade this. All right, so I can identify that this is resistance before it comes into here. Why? Because I saw this price action right through here. So I know that we're probably going to come into resistance here and here. And so what I'm looking for, and maybe I saw my prior lower high here, and over there, those bodies. And then I saw a bunch of price action both here and all through here. All right. So now what I've got is I've got some levels to work with. So let's say I was trading it here. I saw this strong. Now, I could try to bottom feed and try to buy on these support levels, especially. Personally, I love it when support and trend lines coincide. I will, this is more advanced, but I will take what I call very tight stop loss trades into these and just try to pick the bottom a little bit. Just know these are actually no better than 50% trades. You're normally winning only 30 to 40%. But if you do it right, you set a really tight stop loss, a low downside and a very large upside. If you win a trade, if you have really big wins and really small losses, you can win 30% of the time. So this is like a very low probability trade. A high probability trade is wait for this big impulse to happen. So price pushed up here. Now we know we got a lot of buyers involved. There's a lot of buyers involved in this market. So what I do is I now watch for it to come back down to another good level to buy support. Now, here I would have seen that it came. I'd been watching this support, right? After this big impulse up, I'd have been watching this support level, and I want to take what's called a confirmation signal. So I want to wait for price to confirm that it's going to resume up out of here. There's a couple of ways to do price confirmation, but say this is the level I'm watching, for example. I would have put an order in here. Now, I would have had my stop loss down, say, either here or here, depending on how I'm trading that, right? But the main thing to know is I'm going to buy into this support. Now, this would have been a losing trade for me, or I'd have maybe break even. I'd have come into this resistance, and I might have moved my stop loss up to break even. So if I bought here, as price moved up to here, if my stop loss was here, I would have got stopped out with a loss. All right, so as we came into here, this would have been a losing trade. Just know, no matter how good your system is, you're going to lose. So I would have bought right here, and I would have lost as it came in, and I would have got stopped out below that, coming into this trend line, as an example, if I would have taken that trade. But the very next trade, all right, that's all right. We lost our first one. I lost, say, 1% of my portfolio. I did a 1% risk trade, so I lost 1%. All right, no big deal. All right, so we keep looking for the next step. It's a big deal. We don't want to lose trades, but they happen, so just don't worry about it too much. All right, so same exact pattern. I see this, and I see some resumption signals here. So I personally would have waited for this break above this support, this resistance. I would have waited for this support to held, and I would have found another confirmation signal I'd have bought right there. That'd be my second buy. So now I've lost 1%. All right, and this is a random example. I did not plan to do this. This just happened to work out really well. I lost 1% here. All right, so I'm down 1% as of this point right here. Right, and I did another 1% risk trade. So my next trade would be I'd buy right here, and I'd put a stop loss right down here. Now you see the price action worked out very well for me. But the whole secret is I was waiting for an uptrend. I was waiting for a clearly defined uptrend. I didn't try to buy down here because I don't know we're in a downtrend here. I would have been going the other direction. I've been shorting it all through here. But now I see that we're in an uptrend. Okay, now it's time for me to reverse gears and start going long. So now I would have taken this entry here and I would have held it. Now it would have broke these resistance levels. And so what I would do to manage this trade, as it broke out of these resistance levels, as we broke above this second resistance here and came back into it and resumed off of it, that's my signal to move my stop loss up to break even. Because I don't think now we're coming back down here. I'm going to see what else happens. And then we get a really strong impulse up. Now these big monster impulses up, a lot of times I'll take profit. So how I continue to manage my trade, either I'll go ahead and take profit on this, or if I think the market still could go up a lot more, I'll simply keep moving my stop loss up to a level that I like. And that's a nice profitable trade. So now I went from a 1% loss to probably this is a 2% win at no worse right here, right? So I got a 2% win on my hands if I get stopped out right here. Or I could have taken, if I'm smart, I see this huge 1, 2, 3 strong days after coming out of a bear market, I might go ahead and just take my profit here for 3% profit. But say I wasn't that smart. Say I wasn't that smart to take profit. I just held my 2%. And I think it's going to go up. All right, so it ping pongs around here. I maintain this stop somewhere below this. See this wick and this trend line here? We also broke, in this case, I actually wouldn't have taken profit, and I'll tell you why. We broke above a trend line, and I want to see what happens when I break above this trend line. These breakouts are huge, have huge upside. Hey, howdy. So these breakouts have huge upside potential. So I would have wanted to see what happens here. So now I'm still holding this 2% win. Say I wasn't smart enough to go ahead and take the 3%. Which maybe I should have. If I see it ping-ponging around, I get another huge impulse up. Now, somewhere in here, I got to either take my profit or keep moving this stop loss up to below resistance. That's what I do a lot. A lot of times I'll just wait, and I get stopped out for profit a lot. A lot of times I don't take profit. It's about probably 50-50 for me personally. That's not what's important. It's what this is how you're going to manage your stuff, not me. All right, so now I've pushed this trade up. And I've been pushing this trade, just letting it ride, and I see it get this huge impulse here. This is probably a great play to take like a 5% win. All right, by this point, I probably have a nice 5% winner on my hands. That's a huge trade, more than 5%. That's probably from my entry would have been 166, my stop loss would have been 143. I went from 166 to 300, yeah. So this is way more than you get the idea. It's like a 10% win. But even if I just keep managing that and I keep moving the stop loss up, I would have moved my stop loss finally up below this resistance. And as price came back down, I'd get stopped out for like a nice, 5% win, for example. So we probably talked about a lot more. Let me go to the comments, see if there's anything new that we want to talk about. Let's see what ETH's doing right now. But I just wanted to, I'm going to try to turn this into, edit this into a video. So thank you all for watching this part of the video. Thank you for your support. All right, let's get rid of all this. Let's go look at what ETH's price action is doing right now. So that's just the basics of trading. Support and resistance. It happens over and over and over again. The market breaks resistance, and that becomes support. And that's how. There's two things to know about trading. The simplest tips in trading are trade the trend. Identify your trend. When you have an identifiable uptrend or downtrend, then you buy on resistance and you sell into support. Or you buy on support. And you sell into resistance. And when the market's going the other way, you do the opposite. But let's not talk about that right now. We'll worry about upside. All right. And the other thing is risk management. You can see an example here. I could have taken 3 or 4 trades through here, and I can lose. If you let your winners run and you have big 3 or 4% wins, and you have smaller 0.5% or 1% losses, the big wins will more than make up for your smaller losses. Now, ultimately, you want to be winning more than you're losing, but if you can win 40% of the time, which means you're losing 60% of the time, but you're gaining twice as much in your wins as you're losing on your losses, you're a profitable trader. All right. No problem. Yeah, I hope this is helpful. So we'll turn this into a video tomorrow. Let's take a look at Ethereum. Now, we came into, so here we go, right? This became resistance. So let's mark this as red. So we've come into it twice now. We've been fighting with this prior all-time high. This is an initial rejection. I would bet my, I don't really bet, but I have a strong feeling that we're not going to be below this 1438 line for long. And the reason is the way these impulses play out. You can draw these as waves, right? The market's like a bunch of waves. You can see the waves forming. There's those higher lows, there's those higher highs, and we're fighting with resistance. There's a lot of market participants that are going short or taking profit above this all-time high. Now look what happened with Bitcoin. I want to show you all this. This is the prior. It's a very busy chart. It's getting too busy. I need to simplify it. But I'm gonna make some of these lines thicker for you guys so you can see them better versus these other silly lines I got on here. Let's make this huge. All right. This is the prior all-time high in Bitcoin, 19,845, which held for going on 4 years, right? All right. So look at the price action we came in here. We made a strong impulse up. So up into resistance, broke resistance. That resistance became support right there, right? Fought it, broke it, became support. Then we blasted through that one pretty fast. A lot of buying. Blasted up here, blasted up. Came into the prior all-time high, and then we had our big sell-off. Came back down to this level right here. And then we found support on that level, then got rejected again at the all-time high, and we ping-ponged around. Okay? And then we ping-ponged around, and then the next time we came into it, man, the market just took off and blasted. And then we were off to the races. Let me get rid of all this doodling I've done. All right? But just keep in mind the cadence of this, all right? We're making strong impulses back to breaking resistances, turn those into supports, break resistance, turn that into support, break resistance, turn that into support, break resistance, support, resistance. We fell out of it. We broke this support level back to support levels. That's okay. That happens even in strong impulses. So you're up one, up one, up one, up one, up one, down two, right? And then you make another strong impulse, start to ladder down, and then you break through. All right, now watch Ethereum's chart. So this is ETH-BTC, I'm sorry, our USD chart. So we consolidated here. We broke this consolidation, made a very strong impulse up, very strong, and then came back to support, right? And then we made another impulse up, support, impulse up, support, impulse up, big one. Got a big rejection as we came into the prior all-time high, not quite to it. Huge rejection, broke again 2 levels of support, but we found support 2 levels down, ping-ponged around, came back into the prior all-time high. Got rejected here, but we broke through it and got rejected. Had a little bit of sell-off, and now we're coming back into it now. That's almost exactly what Bitcoin did. Bitcoin didn't quite get there, sold off. Got above it, sold off. And then the next time it was messing with it, it just blasted. It wasn't long, it blasted.